Well, g'day there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you a very quick weekend market update. What I'll change to the weekly candlestick of the Dow Jones Industrial Average, really because this is telling us a lot about the state of the current markets. What we have is a high wave spinning top candle on the weekly candlestick. It's really reflecting the indecision and of course the confused state of the market. You can see the upper wick. This is really showing us that selling pressure, and also the lower wick of this candle reflecting the buying pressure off from support. If I zoom in on the actual daily candlestick of this weekly composition, you can see we came into the week, we sold off on the Monday, we hit our support on the Tuesday with this doji type of candle. On Wednesday, we saw the big market move up 246 points, was it, or 236 points it was on the Dow Jones. I made it very clear on this YouTube channel, do not get too swept up in the bullish emotion or the sentiment. It will be short-lived. On the Thursday, we got that shooting star candle. Surprise, surprise, on the Friday, once again, we sold off 140 points. This market is completely neutral. It's completely range-bound between support and resistance. Right now, it's best to simply leave it if you are a swing trader. It's very volatile, it's unpredictable, it's untamed, and as such, we're waiting for the directional break to take place on the markets themselves. The same is true for the S&P 500, completely range-bound. You see the red box on my screen, you see the green box. Every time we get into the red box, we sell off. Every time we touch the green box, we get bought. So, I mean, this volatility, it is very erratic. It's very powerful, but the actual range that it's taking in or taking off within is very confined, and it makes it very hard, at least, to position yourself for some really good movements in the overall equity markets. Outside of this, I want to pay attention to the Dow Jones Transportation Average at this particular moment in time. We've been keeping a very close eye on this particular market. Let me just zoom out and show you this. We've really been speaking about the consolidation taking place long term. It has been going on for quite some time. Since November, it's really moving into its 8th month. But then we saw the big breakdown last month. You can see right now we broke down below 8,471. We've come back up. We've tried to retest this old support as new resistance. It's really holding. You can see that volume surge coming in. It was on the Monday, and since then we've rallied back up. We're trying to retest it once again. It doesn't look good for the Dow Jones Transportation Average. I've been reading a lot of articles out there suggesting that the transports are already in a bear market, and that is simply not true. Yes, we are below the 100 and the 200 simple moving averages, but to go out and call this a bear market is really a stretch of the imagination at this particular moment in time. I would get behind the discussion and the dialogue of a bear market if in fact this is the left shoulder, if we have just simply established some form of a topping pattern, i.e. the head, and now we're simply setting up the right shoulder, which may take another 4 to 5 months, much like the left shoulder did before we got that final rally back up into resistance at 9,200. 8,234 will be a good re-addition or a re-entry to your current position in the transports. You will have a target down here, about 8,000, that psychological round number. If we do reach this level, expect the transports to bounce, to rally back up into around 8,600, 8,700. Maybe it'll do it twice, who knows, but this is really the signal up in this location right here. Say we get the breakdown and we get the rally and we get the rejection at this level in the future, maybe as soon as August, September, October, then I can place a lot more emphasis behind the beginnings of a bear market. Right now, however, we're simply in a very volatile market, range bound, a news headline driven market. There's a lot of talk, at least on the Greek situation going on, deal, no deal, pricing in the event of a default. Obviously, there's a lot of turmoil right now in the bond markets throughout Germany, or even Europe as that matter of fact, and also the US. We've got yields spiking in the 10 and 30-year treasuries. And really, there's the discussion of where is the safety? I mean, where does this money go to? Where does the flow of money move into? And there's a lot of, at least, discussion right now. Is it going to go into the US dollar or into commodities? And I'd like to think, at least right now, that it's currently moving into the US dollar index. What I can do, I can bring it up for you right now. And this is the US dollar index. And right now, we've been in a bull market really since the beginning of August 2014. We started to break out and really set up a nice trending market. Right now, we're in some form of an intermediate correction. Now, I'm not calling for a complete reversal in the US dollar whatsoever, but it really supports at least the flow of money in the wider economy. Right now, we're oscillating between support and resistance. We were either going to break above 98.06 and rally back up to the 100 area on the index, or break down below 95.93 going back a couple of weeks and set up this type of awkward channel. This really looks to be setting up in the US dollar, and it's really being reflected really nicely in the state of the US equity markets. Obviously, they're all over the place. They're back and forth, up and down. It's a day trader's paradise. But for investors, they're really holding their breath at this particular moment in time because they're pricing in, well, what if this is the top in the market? And it's a big what if at this particular moment in time. We always need price to confirm these market moves if in fact they do set up. But really 17,549 is a good indication at least that we will be entering into a correction. And then we can get into the nitty gritty as to the right shoulder of these markets if in fact it does set up. At the moment, however, we're simply range bound. We're in a very volatile market and we're not getting any clear directional movement in the way of swings or at least trends moving forward, at least into June 2015. Outside of that, again, I also floated the idea of money flowing into gold and silver if in fact that is a safe haven. At this particular moment in time, however, facts speak for themselves. I mean, we're in a bear market in regards to commodities. I've read also a lot of studies to say or to suggest that the bull market, the next commodity cycle will not start until the year 2020, 2022, 2023. If that is to be proven true, we're going to see at least stagnation in the price of the commodities markets. If anything, there may even be some lower prices ahead in the future of gold. I'm not biased whatsoever in my analysis of commodities markets, the same with the crude oil. For that matter of fact, but I'm just simply stating fact. Here we are, we're rallying back down, we're selling off back into support, much like the support level we built throughout 2011, 2012, and into the first stage of 2013. We broke support. What happens? The price of gold sells off. I get behind the arguments for gold. I absolutely agree with them. But again, price action rules. And right now we're rallying back down or selling off into support. And if we start to flinch below 109.22 on the ETF itself, we are going to start placing in some lower lows for the price of gold, the ETF. And also for that matter, the silver index is very much similar. Have a look at this trade or the chart of silver. Again, we've been rallying into support over and over again since late 2014. We're almost back at that round number again, $15. And I mean, it looks as if we're going to at least retest it over the coming weeks. But if we start to see a failure below these lower lows down here, around $14.50, I mean, hold on to your hats and buckle in because silver is also going to come under a lot of selling pressure. As the US dollar will most likely continue its bullish trend. Again, flight to safety, historically speaking, it goes into the US dollar. It doesn't move into commodity markets, commodity prices until later into the market itself, later into what could be a market correction and even a bear market moving forward. It's too premature at this particular moment in time. Again, equities are ruling and as such, they are completely flat, directionless, and you need to be very neutral on the overall outlook of these equity markets. What I've done over the past, it was an hour and 15 minutes. I've just finished the recording. It's up online right now, but we've gone through Apple, Amazon, Boeing Airlines, Baidu, what else? Caterpillar, CVX or Chevron, which is a really good trade setup. Google, GS or Goldman Sachs, IBM, Netflix, Tesla, Walgreens, Boots and Alliance. And I've also done a wild card, so to speak, this week, and that is Target. So the stock this week, which we are also speaking about, is Target. A really neutral trade on that particular stock, a very nice trade setup, which I absolutely love. So, I mean, we're very neutral in these markets. Again, it's really hard to get behind either a bullish or bearish argument at this particular moment in time. It's really a 50-50 situation. The bulls aren't winning and nor are the bears. We're simply just stagnating and moving sideways. And until we break above or below these ranges on these US equity markets, I'm really sitting in the neutral position. I'm not afraid to share that with people. It's not that the analysis doesn't work. It's just a simple matter of fact right now. And the fact is that we are stuck between support and resistance, and we have been stuck since March 2015. Have a look at that analysis class if you want to learn more about trading stocks, and also if you want to start getting into options trading. Very, very powerful way to trade the equity markets and open up a little bit of leverage at the same time as just simply, buying and selling or selling short individual equities themselves. So have a great weekend, everybody. It is Saturday, the 13th of June. This analysis will walk us right through into the trading week beginning the 15th. And we do have another full 5 trading sessions ahead of us, which I do hope will shake this market free. I cannot guarantee that, but the longer we move sideways, the sooner we will be to that direction breakout, which is what we are all very excited about. And we're simply just waiting until more or less it does happen. So have a great weekend, everybody. I'll see you through the week or throughout the week with some more market updates. Outside of that, get in contact with me, success@pivotpoint-trading.com. All the best. Goodbye.